Hi everyone, it's Arnaud de la Pierre and today we're back in a new video about dividend stocks. We will see how these investments can provide a source of regular income while aiming for the growth of your portfolio. The concept is quite simple. By holding a share, you can receive amounts distributed by the company in the form of dividends in exchange for your investment. That sounds appealing, doesn't it? In this video, I want to guide you on how dividends work, so you can move forward serenely in your investment journey. Sit comfortably. Let's begin. First, let's understand the basics. A dividend is the portion of profit that a company decides to distribute to its shareholders. This distribution depends on the financial results of each company's strategy. Some prioritize investor loyalty with frequent payouts. Others choose to reinvest their earnings to support their growth by distributing only a small, reduced portion of the profit. Betting on these stocks may therefore interest those who want a stream of income. We will review several concrete points to grasp the appeal of what these regular income investments generate for long-term investors. When interested in dividend stocks, you must first look at the financial health. Examining revenues, debt, and the ability to maintain or increase distributions is wise. Next, observe the continuity of the dividend over several years. A company that has been paying a stable or increasing dividend for a long time gives more confidence. Also consider the industry sector and overall strategy to avoid too much instability in the stock price. With these details in mind, we move calmly toward a more informed selection, not forgetting the importance of solidity over time. Today, I want to take the opportunity to talk to you about a free app that can help you with your analysis. Available on iOS and Android, it is completely free, as I just mentioned, and offers trading signals. Its interface is intuitive, its tools are powerful, and you can customize your alerts. Everything is in place to quickly spot opportunities in the stock market and receive notifications tailored to your style. By integrating our trades into your routine, you can refine your approaches and save time. So, test it and see if it supports you effectively in implementing your investment decisions. The regularity of dividends is an aspect not to be overlooked. A company that manages to distribute dividends consistently often reflects solid management and well thought out direction. Investors like, I want to say, this stable character allows them to anticipate their future gains. Of course, it's important to always keep in mind that any investment involves some risk. A flattering history never guarantees the future. That's why it's useful to look into the company's current situation. If its momentum wanes, the dividend risks being reduced. Therefore, careful monitoring remains essential. Be cautious of those who display an excessive yield. Sometimes a very high dividend can mask internal issues. If the stock price has dropped recently, the yield may seem inflated even though the company is doing poorly. It is useful to dig deeper to find out if there is a prospect of recovery or if the company is going through a truly perilous phase. It is better to have a decent but stable dividend than an attractive payment that can disappear without warning. Ideally, prioritize the continuity and robustness of the distribution rather than rushing for an appealing but uncertain yield. The idea of holding shares in multiple companies can be interesting. Betting solely on the same sector can expose you heavily to its fluctuations. By diversifying your dividend stocks, you spread out the risk and limit the impact of a potential isolated underperformance. You can consider different sectors like technology, health, maybe even energy or food industry to balance your portfolio. There are other sectors He says there are 13 super sectors, This approach allows you to avoid relying on a single industry and to tap into various sources of growth. You will not try to revolutionize everything, simply to spread your investments to better manage the market's ups and downs. Some investors automatically reinvest their dividends instead of cashing the amount. They buy shares with the sums received. This mechanism creates an interesting cumulative effect. Each dividend in turn generates, other dividends. In the long term, this strategy can boost the value of your capital. But nothing prevents you from receiving your dividends in cash if you need an additional income. The choice is yours, of course. Reinvestment or cashing in, each approach has its advantages. The key is to determine which suits you based on your ambitions and personal goals. Taxation plays a role in your strategy. In France, the flat tax is 30%, and it often applies to dividends, including income tax and social contributions. Depending on the situation, some investors choose the progressive rate if they see a more favorable potential. In parallel, the PEA, the Equity Savings Plan, offers a reduced tax burden after 5 years, provided its conditions are met. Be vigilant about the form in which you hold your securities because it influences the net amount you receive. It's better to anticipate the rules to avoid unpleasant surprises and, of course, optimize your income. To compare several dividend stocks, we often rely on financial indicators like the payout ratio, which specifies
portion of the profit
a
redistributed.
ratio that is too high can be a signal of vulnerability. Conversely, a rate that remains below 60% sometimes seems more reasonable. Also check the rate of dividend growth over time. A steady increase is often a good indicator. Lastly, take into account the competitive position of the firm to gauge its overall stability more clearly. All this data can guide you in contributing to the formation of a coherent set of securities. A long-term perspective often proves relevant for dividend stocks. Daily price fluctuations should not make you panic if you remain confident in the strength of the company and its distributions. Reinvested or received dividends grow over the years. It is one of the paths that requires patience, but the rewards can be promising. The key is to let your investment develop, while capturing a portion of the profits in the form of dividends. Thus, if all goes well, you can combine capital growth with regular cash inflows. Even by favoring this more peaceful path, it is still useful to take a look at your portfolio from time to time. Keep informed about the news of your companies, your choices, the trends in their sector, and announcements that might impact their finances. Sometimes, a firm reduces its dividend if it is going through a difficult period. In their case, you need to reassess its place in your portfolio. Also adjust the distribution of your investments if your priorities change. The idea is not to completely upend your strategy, but to make rebalancing adjustments when it's wise to maintain a consistent vision. Keep in mind that nothing is certain in the stock market. Dividend stocks offer a prospect of income, but they do not guarantee an automatic result. What works today can become obsolete tomorrow. So, before taking the plunge, take the time to assess what you are willing to accept as a potential decline. Some people prefer to secure their portfolio with solid companies with modest dividends, while others aim for more ambitious gains by taking on a larger share of risk. The main idea is to be in tune with your investor personality and adjust your choices as you go along. Each opportunity to learn strengthens your vision and decision-making ability. Staying informed allows you to better understand trends and identify opportunities as they arise. You will then be more confident in selecting stocks that align with your goals. Dividends can truly provide, I want to say, an interesting addition. If you take the trouble to understand the economic logic behind it. Thank you for watching this video till the end. I hope you have gathered some insights to guide you more calmly on dividend stocks. If you found this content useful, feel free to like the video and subscribe to the channel. It helps me a lot. I have plenty of ideas to share other approaches and experiences. Remember, consistency is the key to success. Prudence and curiosity are often good allies for developing your investments over time. I wish you great success in your financial projects. We'll meet very soon for an exciting new topic.